Hello traders, here I am looking at the DAX December futures contract. Now, which way is it going to go? Is it going to go in the bottom to top confirmation that we've got over here? Or is it going to go based on the stretch principle that is taken out to the downside and is going to go further down? This and more in this video. Hi traders, thank you for joining the Master the Markets team. Now a live trading session video today and supporting us in our mission to spread the truth of trading and help you achieve consistent performance. It is Stu Narpan here, founder of Master the Markets Elite Trades Conference and the Traders Open Day. So here you are traders on the DAX futures contract. Now let me just show you that. So that is the December contract that is going to expire on the 15th of December, German 40 DAX. This is what I'm looking at. On the CFD contract over here. Currently, the price is at 12,732. Now, today's principles, even though you might be looking at a different chart or the prices are a bit away, that's all fine. You can always take the principles and you can apply it to your strategy. So today, what I really want to be looking at is how should we be looking at it at two strategies that we can actually look into. Let's just call it strategy 1 and 2. Strategy 1, traders, pretty simple. We just take a look at based on open equity distance. I'm looking at a 1-hour chart. You can apply this principle to any time frame. So on a 1-hour chart, what you can be looking at is whenever the bottom gets confirmed, over here we got the dot. Even though you don't have the dot, even though when the arrow appears by that bar, which has fulfilled the formulas for the smart money for the bottom to convert from a potential bottom to a confirmed bottom, from that point onwards, you can take a position. Okay, so for example, in this case, it was this bar over here that had the dot. And at that point, you can take a position on the close and we take it for the 80% open equity distance. Okay, that's strategy 1. Very simple strategy. What is the 80% open equity distance on the DAX on the 1 hour? For that, I can go on to my trading view chart over here. Let me just bring that up for you guys. Let me just bring that up on the DAX. There you go. And there you have it on the DAX. I've got my open equity tables for over 10 years here, 1 hour time frame. I can quickly pull out my 80% open equity distance, which is 20 points. At this point, I just want to make sure and make you all understand. But here, 20 points basically means 20.00. And if you're considering 0.01 as one basis point, then this will be 2000. But whatever it is 20.00. Okay, so if the current price at the moment over here is at 12731, that means all I'm saying is once it reaches 12750, that was my open equity distance already formed. Okay, so based on that, that's how strategy 1 can be formed. You can take a look from the close over here. I've got 20 points. So let's see, close, right? 12716. As long as it reaches 12736, I've already hit my 80% open equity distance, which I've already done over here. Okay, so 20, as you can see over here, 200 over here because it's measuring 20.0, that's 200, and then I would have hit my target. That strategy 1 already hit its target. You can do the same thing here as well, 20 points target, and you can take your exit point. How you do your stop loss, how you do your trading management, and when do you get out, I leave that for you guys to look at into it. But for the exit principle, that is it. That's 20 points on a 1 hour time frame. Now, that is on the open equity distance principle on an 80% open equity distance. That means 80% of the time, what distance does it reach once its bottom or top has been confirmed? On the DAX, as I showed you, there's 20 points on a 1 hour time frame. And that is for you strategy 1. Okay. Now let's move on to strategy 2. Now, strategy 2 is what we usually speak about in most of our live trading session videos. It's the stretch principle.
If you're enjoying this video, go ahead and smash that like icon. If you haven't joined our channel yet, click on the subscribe button and hit the bell icon so that you get notifications immediately when we post up quality content like this, and especially to get our live trading updates sent directly to your phone.
Let's take a look at a quick recap on the stretch principle that we have talked about. Now, that can be a longer term, a bit more. You can let it run for a little bit more. I'm going to look at that together with you. Now, as you can see, traders, now let me just erase this quickly away. Now, as you can see, let me move on to the daily time frame chart, the daily time frame on the DAX. You can see that in the OHLC bar, if you take a look, right, there's high and low. Now, there's the high over here, there's the low over there. If once I put an open here, once I put an open, the bar now segregates into two parts. One from the open to the low, which is a smaller range. And then there's another one, which is a higher range. Now, for those of you who want to have detailed explanations about the stretch principle, you can watch our other YouTube videos on our YouTube channel, youtube.com/masterthemarkets. Now, as you can see over here, traders, the smaller part here is what we call the smaller range from the open. And the bigger part is what we call the bigger range from the open. Okay, one of our elite traders called it bro, right? That's bigger range from the open. Now, the smaller range from the open, you can also call it the stretch, okay, which was popularized by a big billionaire hedge fund trader, Toby Crable. Now, over here, if you want to use this for intraday trading, so this is on a daily time frame. So usually what we do look at is we look on the daily time frame, today's bar, and we look at for a guide where the stretch will form. Okay, will it form to the bottom side today, or will it form to the top side today? And what we are really looking to trade is the BRO, the bigger range from the open, which will be our bigger range that we can trade. You see, if I were to take a look at any of the bars, you can see that in this bar, the stretch is to the top side, isn't it? And the bigger range is to the bottom. Okay, and then here is to the top side, it's to the bottom. Over here in this trade stretch, 2 days ago was to the bottom. Yesterday's bar, you can see over here, let me just erase that. Yesterday's bar stretch was to the top. Okay, so that's what you can see. Now, today's bar is in real time. Where is that stretch going to form so that I can trade the BRO to the opposite side? Now, to do that, I go into the 1 hour time frame. Okay, still same principle here. I go into the 1 hour time frame, and then what I'm taking a look at the moment is, let me just erase that away very quickly. What I'm looking at, you see, the blue line here, right? The blue line here is my opening line, okay, my opening line, which is what you see as one horizontal line on a daily time frame. From the opening line, you can see that I've got two parts that's happening. One is the bottom, so up to here, to the low. So all this 10, 12 bars has been summarized into just one line over here. And then to the top, this is the highest point it's gone up. So now I will draw that to the top side, and that's that. This is what we got for all these hours of trading on the DAX so far. Okay. Now, critical things, what you got to know. You can see that the lower point is a bit more larger than the upper point. Okay. So from here up to here. So as of now, this one is a bit more larger range. Now, what is the missing points that we need for strategy 2? Strategy 2, what I need is a range. Okay. And the average range that is going to perform every day. How do I get that number? I go on to the daily time frame. I take a look at yesterday's bar and I read off this number, the ATR 10. I've got to keep my crosshair on the bar. As you can see, I can read it off as 305 points. I usually will trade 80% of that. So 0.8 times 305, okay, is what I'll be looking at So when I look at that, 0.8 times 305, that's 244. Okay. So when I go on to the 1 hour time frame, so that is the range I'll be looking at, 244 to form, either from the high to the low or from the low to the high that is going to form. Okay, 244 is the number you need to remember. Once I hit 244, I'm out of the trade. That's on strategy 2.
For those of you who are unsure of any of the terminology or the concepts in this video, watch our free Trader Starter Pack 5-day video course as shown in Empire Cinema. It is educational, entertaining, and covers basics and advanced content with cross-transferable principles for trading and investments. It pertains to both beginners and intermediate traders, all dedicated towards helping you achieve consistent performance. Go ahead and register for it on the link below.
Now, how do I do that? So what I can do is I take the highest point of today, which is 12777. So 12777, okay? And then I take it away from 244. That's 12533. So I mark it on my chart. Okay. So let me just, what was that number again? 12533. So 12533. So that's if traders, if the high is locked in for today and this trade keeps going down further, and then at that point, you can see on the summary diagram, it will keep on going further until it hits its range from high to low of 244, and I'm out. That means on the daily time frame, what it would look like, it's basically that this low point, it will come back all the way down, and then it would do this. Okay, that's how we'll make the range. If it were to go to the downside, okay, on strategy 2, just on the range. Now, if it goes towards the upside, if the low holds and the stretch is formed towards the bottom side today, so let me do that. So if it remains like that, the bottom holds and it keeps going up to the upside, means I get more, let's say more green bars, okay? Then if I lock in that low, I take that low price over here, which is 12642. So 12642 plus, remember our range, 80% range, 244. That will be 12886. Okay, 12886. So let me just type that in. There you go. So 12886. If it goes towards, if it holds the low and if it goes towards the upside. So that is whichever way that it carries on for today. So I've locked in both my scenarios for the downside as well as the upside. So if it goes towards the upside, that's my range, that's my target number for strategy 2. And if it goes towards the low side, then that will be my range for the downside. So I've got it locked in both ways. So this is what we call price trapping. Right. So now you may ask, okay, Tiru, that's all good, but which is the higher probability? Where is it going to go? So to do that, I look at my stretch lines. So you see, this one is equidistant here, right? So whichever red or the green that is broken is where the probability will lie. It's taken out its lower stretch line over here. So there is a higher probability that the stretch will remain to the upside, and this will carry on to the downside towards my lower range point, my lower target point. However, I don't jump into the trade yet on a short until it takes out my first price point at this level here. Okay, takes out its lowest point here. Until then, I do not enter on a short. Another way that I will also look for is I look for another price pattern. If the next bar takes out the low and it forms something like this, that's when I can position myself to also go towards the short side, towards the lower range green line. Okay, so that's that. So I won't enter it until it hits my blue line towards the downside. So let me just put a blue line there. That's towards the downside. Okay, we'll just put an orange line there for you guys. That's towards my downside entry point. So until it hits that or forms a red bar towards a low point, I won't enter that, or we call it a primary bar. All these concepts we're talking about, Traders Basecamp package, okay? That's where, beginners and intermediates, very powerful package and workshop that we have put together, which I highly recommend for a lot of people. And I definitely encourage you all to see Trader Starter Pack if you haven't seen that yet. Now, on the upside, if it does carry on to the upside, okay, then I'm looking for this break over here of this upper stretch line. Then I will wait for first for that line to be broken. Okay, for that line to be broken. So what I would do is at the close of this bar, in fact, if I had entered on the bottom over here on strategy 1, then on strategy 2, the same entry price here, but I'll hold this on to go towards the green line. If you haven't entered it on this dot, if you don't want an early entry, what I can also look at is at the end of this bar close, if it's still a red bar, I can then look to enter on the high of that red bar for a reversal. Okay, so that's where I would look at to enter. If towards the upside, okay, or towards the taking out the high of the highest point of today, 12777, 12778 is where I would look to get onto the upside as a much more later entry, but more confirmation. So if the bar turns around and takes out my blue line towards the upside, then I will remain long, and then I will aggressively trail it for the low of every bar after that towards my green line. So this is the points I will look at into trading the DAX based on the stretch principle, based on strategy number 2. Okay, so reflect on these principles, traders. This is all based on the stretch principle on how a bar forms, basically based on the daily time frame and based on the range. It all starts from here on the daily time frame on how that bar is going to form and form its range, okay, based on the stretch and the BRO principle. All right, that's all for today. Reflect on this. Use whatever principles from here, what I've taught you from strategy 1 and strategy 2, on whichever strategy that you are trading or whichever strategy that you want to formulate. You can definitely extract the principles because they are cross-transferable principles that you can use in your trading. That's all for me for now, traders, on this video. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.
If you want to get notified every time we put a video up, especially on our live trading update videos, hit the subscribe button and turn on the bell notifications icon. This will get the YouTube algos to kick in and for you to join us in our mission to spread the truth of trading further, so that traders like you can benefit from our videos to trade like a master, achieve consistent performance, and change lives.